All right, Dana, buddy. Welcome
Dale, how
back
you
to
doing?
Face. I'm doing fine. How about yourself? It's great to have you back.
Doing
Uh,
great, doing great. My
so, what
apologies. Like I said, Zoom decided to install an
update
update
you?
right when I.
Yeah,
So that's
that's
how technology goes.
no problem. So, what do you think of this AI craze and this last move up in the market? Does it feel like a blow off?
Um, it's a little bit. I think it's versus some of the blowouts we've seen in the past. Certainly not as much. The difference is, I think, and our feeling has been this for the last year or so is that we're in a bear market. So a blow off within a bear market, I don't think necessarily you're going to see, you know, a run up like we saw in 2000, blow off
Okay.
to all time highs necessarily. Although, when we think about the divergences we're seeing within the broader market versus the mega caps. I mean, this is one of the bigger bifurcations we've seen since then. If you look at, for
Yeah.
example, I had a chart of the Nasdaq 100 up there, which has been going bonkers. But here's the value line, and we like
Yeah.
to look at the value line geometric. This tracks the median stock in the market. That
Yeah.
doesn't look like a blow off to me. That doesn't even look like a
No.
bull market to me. So we're seeing, and our VR quantitative model, which relies heavily upon breadth, internal statistics, and that type of thing. We're still very concerned about this market because of that. We're not seeing the broad market rally. All we're seeing is the tech stocks and the
The
mega cap stocks
concentration.
moving. Yeah, one hundred
Yeah.
percent. So
Yeah, I mean things like deer and the real economy and copper's been under pressure and the yield curve and maybe the Fed will go again. There's a lot to be concerned about. There is a wall of worry out there. Um, when you look at even the S&Ps, that 4,200 level was supposed to be, such a clean breakout area, and we're trading on both sides of it for a few weeks now.
yeah.
I'm not that impressed. I know a lot of bears are looking for move to 4,300 as an area to probe shorts. You think we'll get there?
Yeah, I think it's a reasonable target. Obviously that's around the 61 retracement there, which
Right.
and if you look at the S&P 500 in the short term, there's not it's not an overwhelmingly bearish chart. You could see a little bit more upside in the longer term. Sure, we're still
Okay.
hitting lower highs, so and our overall feeling still and backed up by our models is that we're in a bear market in the broader market. So this could move higher here in the short term. Differences, and you asked about the blow off. We don't think this is a sustainable move. So even though our model has been bearish for some time, doesn't mean you can't be long some things that are working like tech and mega caps and the S&P even like this. But the difference is it doesn't. It's not backed up by the internals, which means it's unlikely to be a sustainable situation. So we've been long tech and the mega caps. We've actually taken a lot of profits over the last 2 days. So we sold a lot of our position. Have a huge cash position on right now. But even looking
Okay.
at the S&P 500 equal weight, it looks
Yeah, it
more
looks.
like that value
Yeah.
line index than it does the
Yeah.
the cap weighted S&P. So a lot to be concerned about from a internal and a broad market standpoint. Which, looking historically, when you have divergence like we're seeing right now, invariably the markets have gone the way of the broader market as opposed to the cap weighted index.
Right.
The question is always, okay, when is it going to go that way? And I mentioned the 2000 example, which was the extreme,
Right.
divergence that we've ever seen. So most stocks topped out actually in '98. and we're in a bear market until
Right.
2000. While the dot-commers went to new highs to 2000. I don't think we're going to
So this
see
time it's
anything like that.
Apple. Yeah. Okay.
Correct. Correct.
Because at least we were in a bull market with a blow off. So you're saying the conditions of still being defined as a bear market, that these rallies are really great selling opportunities. Or if you,
That yeah
right? I'm
yeah
interested in your take on TLT because I know a lot of smart guys
yeah
are getting bullish here because of they have their own reasons, but a few of them have been record net short positions in the bonds.
yeah
Inflation coming down, economy slowing. All right, so there's your 10-year.
yeah. So we have the 10-year. Our thought is that okay,
Pullback.
the blow off in the COVID blow off was the bottom in yields
Right,
for there's approximate 60-year cycle and
right.
interest rates. We think that was the low. So we think we go up for several decades to come in yield. So how high we get, I don't know. Maybe we approach those levels that we saw in the early 80s. Not sure, but we think we do go up for decades to come. Obviously, it's not going to be a straight line. You see big moves on the way down. Obviously,
Yeah,
there's going to be ups and downs along the way. Right now, we are long the 10 and 30 year. We think we've got a shot at coming down
3.
in the 10-year towards that 280 level, and then
Okay,
in the 30-year, looking at
okay,
the 3% level there before the next big low within this the long term up move in yields, which, like I said,
okay.
should be for decades to come. So if we get that 280 or the 3% the 30-year,
Yeah,
I would go
it's a
out and get a
sell.
mortgage. And
Okay,
if you didn't lock one in, or if you're looking to move like we are, I would
yeah,
lock one in around there, and that might be the best we get for the rest of our lives, to be honest with you.
yeah. So maybe you get a 6.5, 30 or 6.
Yeah, hopefully, maybe get a five handle. I don't know. We'll see,
Okay.
but it'll probably
Make sure
be
your mortgage broker doesn't get overages. All right.
right.
You know
I
about those,
like I
don't you?
said, I wouldn't be surprised that that's the best we see though for the rest of our lifetime.
How about the dollar, Dana? We've had this nice little pop. Do you think there's more left in it? I know
Yeah,
you pay attention
and
to it.
another theme, I guess, is that I think a lot of these markets are kind of in counter trend moves right now,
Yeah,
like the bond market. We're seeing maybe a pullback here in yields within a larger move. Same thing with the
right.
dollar. We're seeing. I think overall we're still confined to this downtrend for now, but in the short term, seeing a little bit of move higher, kind of counter trend rally.
Yeah.
I don't think it's necessarily going to convince me that we're going higher unless we decisively get above like that 105, 106 level.
Yeah.
So we've got no
I think
position
they
on
will.
right
You,
now.
you know what that smells like a little bit? Uh, Yields dropping, like you're saying, and the dollar railing or having more in it.
Yeah.
Risk off, it sounds like to me.
Yeah, for sure. And you're seeing that what you called maybe a blow off or at least a kind of an ending type move in the Nasdaq and the tech
Yeah.
types
That was
stocks, which
it's pretty
would
climactic.
go along with that theme for sure.
Yeah.
I
Okay.
could see that.
View on miners.
Yeah, miners and the precious metals complex, same thing, same theme. I think this is a counter trend move lower.
Okay.
We trade ETF, so our view is this kind of a complex cup and handle we're seeing, after testing those 2011 highs here in GLD, kind of working that blow off move that we saw up into the COVID high. Now
Right.
we're 3 years into that. We've probably worked that off, storing up some energy for more of a sustainable breakout and a move higher, which should drag up the miners as well. The
Yeah.
problem is the miners are still equities. So if the equity market is in a rough spot, then that'll exert negative pressure on the miners, even if gold to some
It's already
extent silver
started to
are
happen,
rallying. Yeah.
especially in the silver miners compared
Yes.
to what silver gave back. The silver miners like SILJ gave back a
Yep.
lot more.
Yeah, for sure. This kind of last stand here, I think, for SILJ, like
Yeah.
you mentioned. If we can't hold this, obviously, we'll be testing those lows from last fall pretty soon. But we are long SILJ and GDX. We think, like I said, this is
There's
a
a
counter
trade.
trend move.
Yeah.
We do think there's upside, but obviously it's not without risk, and you gotta trade these things. Everything's kind of a trading market right now. So
Great point.
GDX, same thing.
So I knew I'd hear that from you. If there's one word people should write down and have on their desks right now, is be tactical,
Yes,
right?
for sure. Tactical, not just because we're in counter trend moves, but it's kind of
Consistently
range
tactical.
bound. We're
Yeah.
very range bound in most of the markets we're looking at. You're not seeing anything screaming to new highs or new lows. So for sure, I'd be tactical, make trades, rent things instead of
Yeah.
own them, like they say, which is why, as I mentioned, we've got, one of our biggest cash positions that we've had in a long
Where do you
time. And
where do you keep the cash in 90-day bills? What
no,
kind of in this environment? What
no,
do you
just
do?
in a money market, because we're always looking for opportunities, to redeploy, and
Okay.
it doesn't matter which market it is. There are always new opportunities that present
Yeah, it's a
themselves. So
hassle. You'd have to break the bill to put on
yeah,
a
we
new
like to
position.
leave
Yeah.
it. We like to leave things pretty liquid because we have an idea that we're going to be like this for some time, but we never know. We got to try to
Are you worried
follow the
about
data.
the banks that do you think it's over? Because I look at the regional bank stocks and they've had two drives and it looks like there could be at least one more low. They haven't bottomed yet.
Well, if you look at here's the
Yeah.
BKX. I mean,
See the two
does it?
drives?
Yeah,
Yeah.
for sure. I
There's
mean, does
another
that
one
look like
coming.
it's over? I don't. I mean, I think this would be leading the way higher, right? If
Yeah.
if we're out of the woods. Same thing with. Okay, we looked at the broader market. How about the micro caps? Does this
Yeah.
look like we're out of the woods? I mean,
No. Because
it can't get off the ground here. So,
it
um,
sounds like money's going to liquidity, period.
yeah, for
So
sure.
anything
You
that's
look at
not,
the mega
yeah,
caps. Yeah.
yeah,
Well,
yeah,
our top. So XLG, the mega caps. I mean, obviously that's been the place to be long, along with Tex, which is
yeah.
a big weighting here, obviously. But so that's it. Like I said, our models have been negative, but it doesn't mean you can't be long some things that are working.
Yeah.
You stay hedged, keep a lot of cash.
I'm
But
trying to top
um,
pick Apple. What do you think?
yeah,
Uh,
Apple's a tough one for us to trade. So we stick mostly to the ETFs as opposed to the single stocks. But
I thought maybe
Apple's
you'd
a
get
hard one.
your fund would come in and, behind me, support my position.
That's not going to move the needle, Dale.
Yeah, I
I,
know. I'm
I, I would
kidding.
love to support you, but that ain't even a drop
Just
in the
kidding with
bucket.
you.
But
All right.
obviously we took some
We're
profits.
61.8 back
Yeah,
now.
right there.
Yeah.
So there are, like I said, there are, even in a rough environment in the broader sense,
Yeah.
there are things that you can be long, but there are
Yeah.
times there are spots to be long them, and there are spots to not chase. So we would certainly not be chasing here in XLG, and the same thing with Nasdaq 100 right there. So that's why we've taken a lot off the table in those trades right here. If we get a pullback, we can reassess, but it's been a nice trade for us, especially in an environment where our models are not bullish. So
Yeah.
it's been nice to pick some up there, but certainly we would be pocketing some profits here. And like I said, it doesn't not necessarily going to be a sustainable up move. We think it's more of a counter trend move, and so you want to book some profits into those.
China markets look worse than ours, though, don't they?
China looks suspect.
Yeah.
Not a big fan. What
Yeah,
we
me
do,
either.
what is interesting is Japan again.
Oh yeah, it went
Um,
parabolic.
yeah, it's had, and I think you're on the same wavelength as I am when it comes to breakouts and breakdowns. In this in the modern day, though they don't work like they used to, right? It used to be that you get a breakout, you could rely on it for some time.
Yeah.
Right
Yeah.
now,
A
it's
lot of breakout
it's usually
failures.
more of a fake out.
Yeah.
And if anything, you wait till it pulls back and test that breakout point. But we see the Nikkei at what are we at, decade highs here? It
Yeah.
doesn't mean we don't find some resistance made up in the mid 30,000s, but or
Yeah.
32,000s. But strong looking chart. We've already had the long term, the secular bear market. We think we're in a secular bull market here, so buying the dips. But as with anything, it's always a matter of when and where. So, but Japan overall looks better to us. And another interesting looking chart is the hedged
Do you think
equity
that's going to
Japan.
imply a stronger or weaker yen? Do you have a feeling on that?
Well, if you look at here's the hedged equity Japan, it looks even better. So DXJ,
Yeah.
it hedges away the yen, so that
Okay.
would imply a weaker yen.
Weaker. Yeah.
So I mentioned there's not much going to new highs or new lows. This is one exception.
Markets
DXJ
love
moving
weak
on, moving to new
currencies.
highs. What's that?
They love weak currencies, markets.
Yeah, 100%.
Yeah.
So you have to find ways to capitalize on that, either shorting the currency or finding instruments like this, which already has that embedded in it. So there are things out there, like I mentioned. That's why we don't. That's why we leave our cash liquid in case we do come across opportunities. And there are things out there like this.
Okay.
Another one that
All
they were
right.
always asking me, where in the world would you go? Would you ever think you'd go to Argentina? Well, probably not, but I mean, yeah,
Here comes a weak currency, so its market exploded, right? Yeah, it looks pretty. Come on, baby. All right. Not seeing it, Jamie. Dana, are you there? Well, I think we lost Dana. Or was it me? Can you guys hear me?
No, I can hear you just fine. I think we did lose him, and yeah.
Okay. All right. Well, it was a great interview. We could still use it.
Oh, he just
here he
popped
is.
back in.
Hey, Dale.
Yeah, Dana.
Yeah, okay, got you.
All
I
right.
must have
So,
cut out there for a second.
yeah. All right. So, why don't you, yeah, there were some real nice looks today. And, we went around the block on, majors and things you're seeing. If people want to follow your work, best way for them to do so, Dana.
Yeah, so as we talked about, my our main business is managing money. Let's see here. How do I share? So we manage money. We also have a site for traders, do-it-yourself traders called the Lyons Share, where basically we share on a daily basis what we're looking at in our management business, and actually what trades we're actually making. So on a timely basis, so they can follow what we're buying, selling, shorting, that type of thing, and then they make the moves themselves. So the lionsharepro.com would be where you can find that. Actually have a sale going on this week.
I lived in that building on the left side of that shop.
Yeah, you mentioned that, I think, in the past. The
Bob
Marina
Newhart.
Towers, right?
Yeah, Bob Newhart and I lived in Marina City.
Oh, okay. My brother lived
you remember the Bob
for a while.
Newhart show, right?
Oh, yeah.
Yeah, okay.
Great
So,
show.
yeah, that's when I was a member at the Merc, when I thought I was a big shot.
Yeah. Well,
Okay.
we always all of us Chicago
I-
folks spent
I
some
was-
time down there at some point,
Yeah.
right?
I was a legend in my own mind.
Yeah, we all were. We all were. You're still a
Anyway.
legend though, Dale.
Yeah, I know what kind. Infamous. So
Yeah. So you can
okay,
find
so-
us there, and if you're interested, like I said, this would be a good week to join if you want to follow along. So
yeah. So Laura lives in Argentina. We have over 120% inflation for real. 8
Yeah.
to 10% monthly. People spend all their incomes because they won't be worth anything in the following months. What a tragedy.
it is. This is a disaster, and I hate to think about monetizing that, but
Yeah.
you know, that's our
Yeah.
job as money managers. But
Yeah.
we'll keep
Well,
them
you
in our
know-
prayers as always, right, Dale?
Yeah. Bobby Axelrod on Billions made his first big trade shorting airlines as a plane went into the building.
Hmm.
You ever watch that?
I never,
series?
never. No, I've got
You-
3 kids, so I don't have time to watch any television.
All right, buddy.
I'm in front of my screen or on a baseball and softball field
Oh,
24/7. So
All right, buddy. Dana,
All right.
always great to catch up with you, buddy.
Yeah, appreciate it. Always a fun
Thank-
time. Great site, great interviews. I appreciate all the work that you do.
Thank you, Dana. Have a great summer. We'll get back in touch around in the summer.
Sounds great. Thanks, Dale.
All right.
Take care, everyone.
All right. Dana Lyons, everybody.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.